Hi, it's Dustin with Dustin's Dollars, and today I'm going to talk about some of the risks and some of my concerns with Knightscope as an investment. Before I get into anything, let me read my disclaimer. I am not a financial advisor or a financial professional of any sort. All opinions I express in this video are mine and do not represent those of any company or any other individual. I may own investments in some of the companies discussed in this video. I will interject right here and say I own preferred shares in Knightscope. So I have a long position in Knightscope. So basically, this video should be for your entertainment only because I could be wrong about everything I say in this video. You need to do your own research before making any investment decisions. So with that out of the way, I am going to talk about some of my concerns with Knightscope, and I do this to attempt to present a balanced viewpoint. Right? I know that I have made some videos about Knightscope talking about some of the positives and things that I like and where I see where they're going. But make no mistake about it, this is a very, very risky stock to invest in. And it's if you've actually read the investor materials, I'm pretty sure it says you should be prepared to lose your whole investment, and that's a very real possibility, right? I did talk about their cash and the burn rate yesterday, and I'll go into just a little bit of that today. And I do think, well, let me just get right into it, right? And again, they are a very risk investment because they are losing money. Those, as I've mentioned, they have negative gross margins, right? That's really the elephant in the room. Because it's hard to really tell a story for any company of how it's ever going to be a good investment, or really headed towards anything other than bankruptcy, with negative gross margins. And that is where Knightscope is currently at. Hopefully you can see these numbers. I'll make it even a little, oh, that wasn't good. Made it way too big. It scrolled when I tried to zoom in. But you can see here, right, in the 6 months ended June 30th, 2021, which are the most recent numbers that we have, the revenues were about 1.8 million. Their cost of services was 2.5 million, right? So they lost at the top line, right? Or I don't know if you call it top line, right? The revenue's top line. This is your gross margins, right? They had a gross loss instead of gross profit. Their gross margins were negative. That obviously is very, very bad. I have thoughts on how they can improve that. That's going to be the subject of a future video. I'm not going to talk about that today because based on what they have actually reported, they have negative gross margins. And if they continue that, hopefully it's obvious to anybody who is making investment decisions that if they have negative gross profits, I don't see how there's really a future for the company. So obviously they've got to fix that. And I have theories on how they might, and I'll talk about that in a future video. But today, I just want to call that out as humongous risk, right? If they can't actually fix that, then of course this is a horrible investment, in my opinion, right? Not giving investment advice. Maybe I should qualify that a little bit more. I think it will not end well, is my opinion. So, anyways, let's move on to the second elephant in the room, and that is the growth. I had this graph that I covered in a prior video, and you can see that early on in the company's history, they were growing, right? In 2016, mid 2016, I think was the earliest time that I got the reported numbers, all the way through the beginning of 2019. They were growing, linearly, which is, you would expect this maybe to hit an inflection point and actually, go, hockey stick growth, right? Up and to the right, parabolically, at some point. That's the ideal growth trajectory for a startup, right? Is that they actually hit this inflection point where, they get product market fit, and they are able to advertise effectively and spend money to get clients, and then they ramp that up, and then they grow very quickly, and the company can get sort of a critical mass in terms of size. They have not demonstrated that yet. Now, and I did go over this a little bit, where they've actually reported recently, not in SEC filings, but through the media, that they have had growth. And as of right now, that is a large part of my thesis as to why I am still long Knightscope, is that I do think there is growth, and the growth is returning to the company. But even with what they've reported, let's assume that this is completely accurate and that they've been quoted correctly in the media. Nothing says that they're going to continue this growth, right? Nothing says that this wouldn't flatten off again. If this flattens off again, I don't see much of a future for the company either, right? They have to really continue aggressive growth in order to ever reach a stage of profitability. But based on their actual SEC reported numbers, we can compare, over 6-month periods, their growth flattened out. And I think you can give, I mean, as an investor, you obviously make up your own opinion. I think you can reasonably explain away most of 2020, maybe even the first half of 2021, due to the pandemic, right? And I've said this before, a lot of their customers, it was commercial properties, and a lot of those customers were not doing so hot themselves. So, they might have been cutting security, and it had really nothing to do with the fact that it was, Knightscope's robots, but they might have actually been cutting security guards as well, right? They might, that might be the case, so that can explain away some of this flatness. What has never been explained to my satisfaction, I'm not sure that's ever been really explained in any detail at all, is the period of 2019, right? The pandemic started in 2020, if I have my if my memory serves me correctly. So all of 2019 they were basically flat. What happened there? I don't know. That's a big question mark. The fact that they've resumed growth now gives me some faith, but this is going to be the proof is in the pudding, right? We're going to need to actually see the growth for the thesis to continue being valid, right? And that's maybe my way of saying, if the growth stops at the they say they have 90 deployed. If the growth 6 months from now they still say, well, we have 93 robots deployed, that's going to be a red flag to me that they the growth is not there that I'm expecting to see, and that I want to see in order for this to work out as an investment. And we'll see, but it's a risk, right? That might not happen. So be fully aware that that's that's a concern that I have. All right, moving on. Let me go back to my notes here. Sorry about that. I gotta zoom back out so I can read my notes. So here's my next one. Executive compensation, and this isn't outlandish, but it's not great. Like, I understand they're in a very expensive area. They're in they're headquartered, I think, in Mountain View, California. That's a very expensive area. So it's not realistic to have executives at your company making $100,000 a year, because you couldn't even afford, well, let's just say cost of living is very high out there. At the same time, I don't know, it still feels a bit high to me, making $500,000 a year, 400K, et cetera, as executives in the company in the state that it's in, right? This does not really, this strikes me as heads I win, tails you lose, in the sense that they're making plenty of money right now, and they'll, even if the company goes bankrupt, they're going to, and all their shares end up being worthless. They were well paid in the meantime, and no, they're not going to get rich, because nobody's getting rich, right? They're making what a lot of let's say software engineers at some of the top tech companies are making out there, I think, and they're probably working. I don't know. I assume that, I hope they're working harder, for their salaries and for their bonuses. But I mean, that's still quite a lot, right? And it makes me wonder, why are they not ramping up more on the the stock options, right? Like, if they kept granting their executives options with strike prices at the IPO price or above the IPO price, give them 100,000 shares that that have a strike price of $12 or $15, right? Give them some incentive to make the stock price go up over time. And again, I don't know what's standard, and now we'll have we'll actually have a board of directors that will be determining that. But I don't know. I'm not it. As an investor, I would like to see it lower, given the progress the company has made. I feel like the executive compensation has been higher than I would have liked it to see. But yeah, so that's a concern for me, right? That that they've been paying out quite a lot. All right, moving on. Advertising. They spend a boatload of money on advertising, and look, I do not have direct insight into how effective this is in the long term. And I've speculated before that some of this advertising was not intended to bring in sales of the robots. It was intended to bring in investors. But they've spent a lot of money on advertising, right? And I think it was even, if I recall, this is for the year end 2021. I think if we go to the, give me, where can I find this? It's not on the balance sheet. It's further down on our statement of operations. Yeah, so in 6 months, they spent 6.6 million in the beginning of 2021. That's a lot, lot. For the company, in their current state. And it jumps out, right? You just scan through this statement of operations, and that's the biggest item on here by far. I mean, other than the warrant liabilities, and I already went over that. That is what it is. That's not a cash expense, but that's worrisome to me, because it's burning cash like crazy. And and again, I did cover this just a little bit, that Bill has made a comment that they might scale back the advertising and invest more in just direct sales staff. But I'll believe it when I see it. So that's definitely a concern that I have. And that gets on to my next concern, which is crowdfunding. Like, why are they crowdfunding? I think there's legitimate pros and cons. They certainly have their story that they're telling, that they didn't want to give away control of the company, et cetera, the highest bidder, those sorts of things. In the VCs, venture capitalists wouldn't actually add value to them, because most venture capitalists are, focused on software businesses, et cetera. I don't really buy it. I think, plain and simple, it's pure speculation. Just my opinion. Again, I have no inside information, not affiliated with the company. And I could be totally wrong, but I think they raised some retail because they got more money per share, right? They had to dilute less for the same amount of cash. And even the early rounds were oversubscribed. It wasn't until they raised the valuation up to 300 or 400 million, that they are actually not even selling out of their fundraising rounds. But I mean, it makes me wonder, why couldn't they raise money through other more traditional means, right? It's a concern of mine, and it's kind of done and over with at this point. But it makes me worried that next time they have to raise money, and they're looking for enough cash that they can't just go to retail. They need to go to banks, people with deep pockets, and that they won't be able to raise anywhere close to their valuation. And again, that's, hopefully they can grow into their valuation. And that's, again, a separate topic, but that is definitely a concern of mine. All right, moving on here. This was nestled in one of their prior reports. I can't remember if this is in the most recent. It's at least in the most recent 10K or 1K, I think, their annual report. In April 2021, the company received notice of a client's intent not to renew its machine as a service agreement for the 12-month subscription period spanning 2021 to 2022. The client represented over 10% of the company's 2022 revenue. Yeah. So losing a client that was over 10% of your revenue, that's a big hit to the company. And I think that this actually may be part of I am long Knightscope, so maybe I'm seeing this in a biased way. That partly explains some of this flat growth here, and even why it went down, right? That they actually lost over 10% of their revenue from one client, right? They have had huge client concentration risk. I'm sure they still do, right? Because they still don't have that many clients. So it's both client concentration risk. That's a concern. That's a risk for going forward. And then backwards looking, you do have to wonder, why did the client cancel? Again, it's hard to say. This is in the midst of the pandemic. A lot of companies were probably cutting costs for reasons that had nothing to do with Knightscope, but it raises doubt. So that's definitely a concern that I have, right? If we see more of that in the future, I will definitely have some second thoughts about my position. But that is definitely a risk. Here's another one. The K7. They've been talking about the K7. This is their larger, almost like a car type robot. They're much bigger than the K5. That they intend to cover, larger outdoor spaces. This thing has been in development for years, or sorry, it's been at least announced since multiple years ago. I think, and don't quote me on this, I could be wrong, could be misremembering, but I think they had called out that they were developing the K7 when I originally invested, or when I read the investor materials back in like 2018, I think it was 2018, 2019. So it's been multiple years, and we haven't really heard any updates other than they're working on it. We know that they haven't actually sold out of their or raised their full amounts in their prior rounds, I don't think. And usually you read their what is the use of proceeds, I think is the language they have in the filing, which is what they're going to use what they intend to use the money for. And one of those things is always research and development. And the K7 I assume is a big part of that, because they've had this product under development. So that's a concern, especially when you dig in here and you can see they have some of management target or executive targets, and one of these is for Mr. Lenhart. I think he's the chief. I'm gonna get it wrong. I'm not even gonna say. I think it's Lenhart. It's gotta be. Oh, where's it at? Chief Design Officer. I had it right. Yeah. So let me jump back to it. His target was to complete the K7 Alpha prototype, right? And so that, I don't know how they're qualifying an Alpha prototype, but the fact that they haven't even finished the Alpha prototype, maybe is a bit concerning, right? Like it's it's been in development for years, and it does make me wonder, if this was basically just something that they kind of dreamed up and slapped something together and said, yeah, we're working on this, but really had zero intention of developing this until years in the future. It's hard to say. I mean, clearly if they made it an executive target, they must be working on it. I assume they're working on it here. But that tells me that they haven't actually gotten to any point where they have a working, or sorry, they don't have an alpha prototype, however they're defining that. But I would assume alpha is pretty early on. So that's definitely a concern of mine. Because the K7 might be more complex than the K5, and maybe this ends up just being a money pit for them trying to develop it. It's a very real risk. We'll see. The proof is in the pudding, and time will tell. All right, moving on with more concerns. I have quite a lot. Despite me being long, I have quite a lot of concerns. This is a very risky stock. Insiders control the company. The executives and directors, and basically Bill and Stacy, or William and Stacy, control almost a majority of the company. And when the vast majority of the other votes are, I think, split across a whole bunch of retail holders, they like to say that 28,000 retail investors. I highly doubt you're going to get retail investors to all vote one way, and so that basically means that in practical terms, probably whatever the directors vote for is what's going to get passed. So they have an independent board now, except more or less those two executives could vote whoever on the board out that they want, because they have these Class B shares, right? They have these Class B shares that I think have 10 times the voting power, maybe, of the Class A shares. I don't know. Yeah, so that's a concern of mine. Here's another one that happened a couple years ago, and again, I've been following the company for a while. The CFO left. Marina Hardoff. I don't know how you actually pronounce it. Sorry, I probably butchered it. She resigned as the CFO in 2019. I don't know why. You never get the story here. And it's hard to say, there's lots of reasons why this might happen, but certainly makes me wonder. I think it's something it's been quite a while, and they've got a new CFO, and clearly they did a successful public listing, but what happened back then, right? Why did Marina leave? I don't know. And this is a smaller one, but it's a little, I don't know. It's weird. It's weird, and this maybe nothing, maybe things work out perfectly, but Bill and Mercedes is the chief information officer. I should just be able to scroll down here and see it. Chief intelligence officer. Sorry. Sorry, I got that one wrong. Yeah, they're married. She's married to the CEO, and I don't know, like that. I could just see that making things weird at the company. I'm not really going to say any more about it than that. Just that it's something it's pretty far down on my list, but I have a little bit of concerns about that. Yeah. So that goes through most of my concerns that I had that I have with the company that I wrote down. I mean, I think there's certainly more things you could want from the company, like maybe more transparency. That might be another one that I would call out there. That like they don't publish numbers like their churn rate, right? Like how many customers cancel on them. Those are metrics that you would get from other like they like to call themselves machine as a service. Those are metrics you would see from like software as a service businesses. They would publish their churn rate and try to manage that. Well, I don't know if they'd all publish it, but it could be published, right? I know that internally when you're in a company like that, it's definitely something they track very closely. But they haven't really given any indication of that. I might try in the future to estimate that from the numbers that we do have that are publicly available. But it's if we had some data on that, it might help ease my mind in terms of how many cancellations they actually have. Because they certainly do the opposite. When they have renewals, they certainly like to put out some PR to say, hey, we had one of our clients renew for the third year or the fourth year. But that's only telling one side of the story. Yeah. Okay. So that is what I wanted to cover. Thank you for watching and have a good day. See you.